Thank you, everyone, for joining us for the webcast on the unmet need for RV and marine storage. This is Jeremy Johnson with Flyer. I'd like to thank David Baker, who will be presenting today from Zenith Storage, American Dyne Company. As many of you know, RV storage is a very hot market. COVID-19 has changed many things and created several new trends that are just starting to be recognized. People are leaving dense urban areas. There is now a desire to work more remotely, and the desire for mobility and flexibility are only going to grow and increase. David, could you give us a brief background about yourself and describe how you got into self-storage?
Yes, Jeremy, thank you so much. And ladies and gentlemen, thank you for having me this morning and for attending this webinar. So I originally come from the capital markets as a hedge fund manager, proprietary trader in New York, originally a broker 28 years ago. And I got into self-storage in 2014. How I got into it is that we did a quantitative analysis at my firm looking at all types of real estate and determined that self-storage and parking lots also, more so self-storage, were and are highly susceptible to technology to make them minimally human resource intensive. And over the last 6.5, 7 years since I've gotten into storage, we've seen more and more technology come to the fore, and facilities become more automated and become less human resource intensive. So that's why and how I got into self-storage.
Okay, so David, why are you developing self-storage for RV and marine versus traditional self-storage?
Great question, Jeremy. Thank you. So originally, we've been in self-storage for the last 6.5, 7 years. I believe while our business has done well, and our business has done well during COVID and been minimally impacted, I believe that self-storage, whether it be Las Vegas or throughout the country, is largely saturated, particularly in urban areas. The self-storage facilities we still look to buy are those that are in an existing neighborhood that have been incumbent for many years. But all in all, I think the new development of self-storage has become quite saturated. In contrast, there's a big secular movement we see to an RV and marine lifestyle. And I think it's going to be here for the next 10 years or so, maybe even longer, maybe forever. Difficult to say, but for at least the next 5 or 10 years. And so there's a great demand now for RVs and boats. If one walks into an RV store to order an RV, the wait is 6 months to a year, generally the same with boats. And in fact, I was unable to even buy my 12-year-old boy a bicycle for his birthday because in Las Vegas and in Seattle also almost impossible to get a bicycle. So the outdoor lifestyle, the urban migration to the suburbs and to rural, and the mobile lifestyle is really driving our decision to develop RV marine enclosed storage. You now have AI burger flipping robots in Los Angeles, self-driving trucks, Fortune 50, Fortune 500 companies encouraging something with them, many of them mandating working from home. So people are saying to themselves, why should I sit in even a home office when I can work remotely in front of a lake or in front of a beach? And again, we see this trend as growing more and more over the next 5 to 10 years, and that's why we're pursuing this project.
So David, why Las Vegas?
So putting aside the fact that I now live here and have been here the last 3.5 years, Las Vegas is one of the fastest growing cities in the country. Population growth annually has recently been 4.5% to 5%. There's a big migration of people from California. In addition, we have close access to national parks here in Nevada, meaning Las Vegas does. We're close to national parks in Utah. We have quick access to move west to California, east. And so Las Vegas is a very centrally located place in addition to the population growth and migration here. So that's why we're in Las Vegas.
Okay. So David, tell us about the Zenith Storage opportunity.
Sure. So we were looking for a long time for the opportunity to develop RV and marine we found a piece of property at a compelling valuation. There's less and less urban parcels, and with that, it gave us the opportunity to move in to RV marine storage, which is why we started this project. If we move to the investment thesis, I'll just quickly describe here on the investment thesis. Oh, excuse me, disclaimer, apologize. So here's the mandatory disclaimer. Obviously, there's no guarantees. I won't read everybody the safe harbor statement, but here it is for your reference. Moving on to the investment thesis. So this is not our first time in storage. We've developed facilities, self-storage facilities, 4 times over the last several years. This is our 5th project. Traditionally, what we've done is we've bought facilities in bad locations, poor condition, and low occupancy. So everything they tell you not to do in business school, we do, and it's worked out well. We're capitalizing on automation and operating efficiencies. I'll talk more about the automation as we move through the deck. The business has historically been recession resistant, and going through COVID, again, we've been minimally affected. So it's been a very good business. It's got stability of cash flows, and I think our performance during COVID proves that. We expect project value, it's not a guarantee, but we do expect project value to increase 2 to 2.5 times in terms of once the facility is completed and fully leased up. So the capital appreciation is quite strong, and then there's obviously opportunity for cash flow. We're about 49,774 net rentable square feet. We put in 50,000, that's approximate square feet. So it's a good sized project. It's 54 spaces for RVs, marine, and cars, vehicles, etc. So let's move on to the next slide. Okay, as I mentioned, our business model has been to basically buy facilities and redevelop them. Bad location, poor condition, low occupancy. In this case, we're buying vacant land and we are developing it. Again, the reason we're able to do this project despite the prices of real estate in Las Vegas is because we found a parcel where a family office was willing to let go of it. Probably, I can't guarantee this is the reason, but probably because they didn't know what to do with it. It was zoned M1, which is industrial, and for us, that's perfect. And we're gonna develop the facility and then generate, I believe, high project capital appreciation and monthly cash flows. Moving right on. Oh, by the way, if anybody has questions, feel free to ask them. Jeremy, can you describe the protocol whereby they type in the question?
Yes, absolutely. The best way is to go to the Q&A function. You can also use the chat function. When the questions will come in, I'll read them to David so that everyone can hear it, and we'll give him time to respond properly.
Thank you, Jeremy. So that's the business model. In terms of the project being underway, we've received a bank commitment. It's not an LOI, it's actually a commitment letter from underwriting for an 85% loan to cost loan. We're very happy with that. The rate is quite low. And we have submitted our plan to the planning department, and we are anticipating in the next few days getting the green light whereby there's a 65-day clock to go to the county commissioner and go through that process. We've already gone through public works, fire, et cetera. So we're pretty far along in the planning process in terms of getting ready to be on that 65-day clock with the commissioners. Moving along to the next slide. So under customer value here, what I think as a owner operator in my experience over the last 6.5 years is that security is number one. So I'll talk more about that as we go through the deck, but I think what customers, what tenants care about most is security. Of course, they want to preserve the value of their assets, which is critical, and have lots of amenities, which we'll get into, but security is number one. So I believe we'll be one of the most secure, if not the most secure facilities in Las Vegas. Next slide, please.
David, we have a question. It's from Michael Ezer. How are you separating yourself from competition? Are these enclosed, climate controlled, and plug-in ready units?
Okay, great question. So in terms of competition, there's one facility that is enclosed RV storage similar to ours. It is 17 miles away from us. In that case, what they're doing is they are condo converting the units and selling them at $103,000 to, I believe, 125,000 apiece. So that's a very different model from us, where we're going to be renting the units. But it is 17 miles away. They have sold, I believe, 40 or more of their 110 units in the first 2 months of operation. There's one other prospective competitor in Henderson that's under construction. I don't know what the amenities will look like. There's a slide that I'll talk about the amenities more later in the deck, but we'll have significant amenities, and we'll probably have facility with one of the most, if not the most amenities, again, of any facility here in Las Vegas. So there's only one current competitor that's selling the units, and when that's done, that's done. And then there's another one under construction, also about 17 miles away from us as well. So right now, as we see it, the competition is quite far away, and there's minimal competition. Not to say there won't be more over time, because it's something that the REITs, insurance companies, pension funds that own a lot of self-storage seem to have not figured out. So there has been interest already in buying our project outright, but we're not interested in selling it. The last part of the question, in terms of climate controls, we will have temperature controlled. We're using evaporative cooling, which is incredibly effective. I'm surprised myself how effective it is, but the cooling works very, very well. So it will be temperature controlled.
Okay, you got a couple more questions. The next one is, what is your estimate for dollar rentable square foot when and running 21/22? What inflation factors are you using? And what are your occupancy functions?
Okay, so I'm not sure about the occupancy function question. Maybe the person can write a little more detail about that. I'll get more into this, but we're assuming a rental rate of about $795 a month. Right now, we're seeing rental rates $675 to $750 with almost no amenities. So we think at $795, a year and a half out, we're quite conservative.
Okay. Have you tried to, this is from Lou, have you tried to negotiate municipal incentives for your projects?
No, not as of yet. Right now, we need to get farther through planning, and there may be an opportunity to do that, but I'm certainly not saying there is one, because Las Vegas is a high demand area. And one very interesting example of that to me is that MGM sold all of their property to BlackRock, the well-known private equity firm, within a few weeks or a month of COVID occurring back in March. And BlackRock was happy to pounce on it. Also, it's hard to find even a 2-acre parcel in urban Las Vegas. Our parcel is 2.33 acres. So there's a tremendous amount of demand here. We've not seen prices decrease in terms of self-storage facility sales. We've not seen residential sales come off much. So I'm not sure that there really would be very much interest in any sort of incentives. But we can see, because it is an area where the property is located, that's being regentrified.
Okay, 2 more questions and you can get back to the presentation. How does your per unit exit value compare to the valuations of the condo competitors is selling their units for?
Okay, so by per unit exit valuation is the question related to what we think the valuation of the facility will be upon completion. I'm just not exactly sure what they mean by exit value on the rental rate.
Okay, well, maybe they can give us some more. And what do people do with RVs and boats now if there are no competitors?
Well, that's a great question. It's a difficult situation for people that own RVs and boats, particularly here in Las Vegas. I can't speak about other areas because we're focused now on Las Vegas, but they have to keep them in their driveway, find a public street where they can park them. It's a real problem for which there's not really a very good solution. I think this is just the beginning of the trend to develop this kind of a facility.
Okay, you should go ahead some more, and we'll get to some more questions in a bit.
Thank you, Jeremy. Okay, Vadim, next slide. Okay, thank you. So here we are in amenities. This gives some more detail in terms of amenities. I'll just pick a few major things. So epoxy sealant on the concrete pads, that's really, really important because it protects the pad, and obviously lots of vehicles leak. So this is a very helpful thing. We're putting in electric vehicle and battery charging station. The gentleman that asked about temperature control, there's evaporative cooling. You can see that sort of bronze ducting on the top of the unit. There'll be an alarm that will be inside the unit. So each unit will have a unit alarm. Probably should have called that out in a little better detail. There'll be tenant surveillance. The tenant can surveil their own unit anytime, vacuum, power, high lumen lighting. So there's a lot of amenities here. Just to talk about security on the outside of the facility, what we've submitted to planning is 8-foot walls. We wanted to put in razor wire, but can't do that in Nevada. But 8-foot walls, and ingress and egress will be with a transponder. So there won't be a keypad to be manipulated. There'll be a transponder using Face ID of your phone, or alternatively a sticker which acts like a fob, if you will, on the front of your vehicle. So that will be some of the security. We'll have an alarm system and cameras everywhere. I'm pretty big on cameras and lighting in every facility we do. We never take any shortcuts on that. So, we'd like to think that every several feet of the facility are going to be covered with cameras and lighting. We want to light the place up like a soccer field. So there'll be a lot of things. And then inside the unit, there'll also be automated self-locking roll-up doors. So plenty of security, plenty of amenities. You can even see on the right-hand side where it says ventilation, security, we put in, I think they call them gorilla bars. Excuse me if I'm not if calling that the correct thing, but there'll be even bars over the venting. So we're trying to make it highly secure. Okay, next slide. So this is our portfolio. 3 of the facilities we own the majority of and operate. The one labeled Casa Grande, we're a joint venture partner with Caliber Companies, Inc. out of Scottsdale, a private equity firm that has about a $550 million portfolio of various hotel and other assets. In this case, it's self-storage. And now moving on to the development that we're talking about today. Thank you, Vadim. In terms of track record, so this shows our operating performance for the 4 facilities when we purchased them, the impact by COVID. While this is not a guarantee, I definitely feel strongly that we can actually increase our operating performance of our current facilities. And it seems to me, in my experiences, the more marketing you do, the better things get for occupancy and for rates. And that's about it here. Next slide. So this is capital appreciation of our current facilities. We've again included when we purchased them and then how they've done. This is a blended rate of appreciation across all 4 facilities. Some facilities have increased, 150%. Some have increased, 35%. But this is a blended return. We've done pretty well compared to the indices and REITs, etc. These are approximations, everybody. Okay, next slide. Jeremy, I don't know if there's any more questions so far.
Yes, you actually have a lot of them. So the first one is $795 per month. Is each of the 54 units the same size, or is $795 the average rate?
Great question. So $795 is the average rate. Not all the units are the same size because of the site plan layout, which you'll see in slides here in a few slides forward. So that's an average rate. There's a few smaller units that will be a little bit less expensive. There's a couple larger units that'll be a little more, but that's the average for most of the unit mix.
Okay. How critical is location compared to traditional self-storage?
In my opinion, location is always important. That being said, it's sort of funny. When we bought the facility located at 1040 North VIP Boulevard in Casa Grande, Arizona, with Caliber, it is located 3 or 4 miles down a highway out of the city, and it's 1/4 mile down a broken asphalt road, and there's just nothing there. Now, since then, Leaf and several other big companies have moved there, but it's definitely been a process to lease it up and turn it around. but it's gone very, very well now. It took about three and a half years. So I think location is very important, but I won't say based upon my track record that you can't market your way out of a bad location, because I think you can. There has to be something redeeming about the area, but again, I think location is important. In the case of on the slide we're on, we're about 35 miles away from Lake Mead, which is almost a straight shot east from where we're located. As you can see in the aerial shot, we're close to downtown in the strip of Las Vegas. You can see that in the photo. So we're not far from it at all. We're close to the freeways to head to Utah, head to LA, head to San Diego. So I think this is a great location, but I wouldn't say you couldn't do something in a more suboptimal location. But of course, location is beneficial and can be optimal.
Okay, I'm going to combine three questions. How big in square footage are your RV stalls? Are there dump stations on premise? And how do you ensure no overnight stays or living by tenants?
I'm sorry, the first part of the question, Jeremy?
How big in square footage are the RV stalls?
So the RV units are approximately 900 square feet. We'll say something like 893. Some of them might be, 853, but that's the approximate size. Second part of the question, was that the dump stations or was that the third?
Dump stations.
Yeah, we will have dump stations. There's a architectural rendering at the end of the deck, and you'll see the dump station. So we will have dump stations. We'll have wash station. We may even do a lot of servicing in terms of just detailing and that sort of thing for the tenant owners of their vehicles. So there'll be a lot of security. There'll be a lot of automation. There'll be a lot of amenities. As much as we can fit in there. We were even thinking about a fuel station, but it just doesn't pencil economically.
How do you prevent no overnight stays or living by tenants?
Well, the way we prevent that is that's another good question. Sounds like someone's got some experience as a self-storage owner, operator, investor. The way we prevent that is by watching the cameras all the time. And I can always be wrong, but it's hard to believe that a tenant that's paying, $795 a month with an RV and a boat is going to live in their unit. I mean, we've seen crazier things, but it's unlikely. But the answer is to ameliorate that. We're watching the cameras all the time. We have logs for ingress and egress, and we even have alarms. If the power goes out or something's weird on a gate. So anyway, it takes It takes vigilance and watching the cameras mainly, but there's other ways we track people.
Do you want to keep going, or do you want to answer some more questions?
Sure, happy to answer some questions because we're at least halfway or more through the deck.
What is your backup power?
Well, the backup power, we generally have, sometimes, I shouldn't say generally, sometimes we do, sometimes we don't. In this facility, we'll have backup power. So it'll be a series of battery backups that will power the facility in case the power goes out. We don't draw a ton of power at the facility. And we're also going to have solar, which we can talk about a little more later in the deck. But we're not drawing a ton of power, so some big battery backups will do the job for several hours, if not almost a day.
Are amenities all inclusive of price? If so, is there a way to monetize amenities separately?
I don't think there's a way to monetize amenities separately, although each unit is going to be individually metered. So we may charge something in terms of electricity and probably will pass some small base amount of electricity. If they're charging their electric vehicle all the time or something else. So the way I see it is it's hard to individually charge for amenities, but for power, we can.
What do you anticipate the hard construction cost for the project to be?
Well, right now, what the project looks like in terms of construction costs with reserves is about, reserves are pretty heavy because the bank wanted big reserves. I mean, the reserves are about maybe even 7% of the whole construction cost, but about 51 a square foot, fully loaded. Actually, I believe that might even include our soft cost too. So about 51 a square foot with some variance. A lot of current self-storage facilities are being built at $90, $100 a square foot. So we think this is a pretty good price.
What is your stabilized yield cap rate? What is your projected exit cap rate, hold period? What is the exit cap rate based on if there are no comps?
Okay, let me get into that in further slides, if I may.
Okay, you want to pick back up and we'll answer some more questions?
Sure. Okay, next slide, please. So obviously this is an architectural rendering put on a photograph to see sort of where we're located. The only thing I really want to point out here is the solar. So we're going to have solar to offset costs. Probably going to buy it because of the tax credits associated with it. Where leasing, you don't get the tax credit. So solar is going to help minimize our power costs throughout the year. Also, if you can see on the left side, there's a salvage yard. The right side, there's a manufactured home area, and that's to the right, about 2 or 3 blocks of where we're located, is a Lowe's, which is sort of the anchor tenant for this area being regentrified. To the north is actually Nellis Air Force Base. So it's pretty industrial, as you can see, and commercial until you get to Nellis Air Force Base, which is sort of where the mountains meet the development off at the end of the photo. Okay, next slide. Okay, this is the site plan. It's difficult to read, including for me on this slideshow, but there's site data, there's unit mix information, there's square footage information, there's efficiency information, and so there's a lot here. So anyone that doesn't have the slide deck can email me or call me. Contact information is at the top and bottom of each slide. I will point out a few things here. So you can see what we call the sawtooth design of the facility, and that's where each unit, except for building number 3 at the end, the left and right buildings are at a diagonal angle. And that's because the drive aisle, we want to make it as easy as possible for people to pull in and pull out. And that sawtooth design with the units at an angle facilitates that. At the front of the facility, you'll see 2 units on the left building that are sort of perpendicular left and right versus the sawtooth design. And that's just a function of trying to make the facility as dense as possible. Had we continued the sawtooth design, we'd have less density. The whole goal obviously is as much density as possible. And the efficiency is very high, as I said, about 97%. So people can take a look at the site data, the unit mix information, et cetera, and then can reach out to me because it would be difficult to read this to everybody. Next slide, please. So this is just a map that shows where our facility being developed is going to be and the proximity to Lake Mead. It's about 25 miles, 35 minutes, pretty much a straight shot. You can see there's not a lot of development to the east of where we're located, where the 147 highway icon is. And the rest of that land in terms of future development, I just spoke with our land use lawyers, is all US land. Other than mining claims, nobody can develop there. So we're pretty close to Lake Mead, which is a good thing, obviously. Next slide. Okay, so people want to know what is the timeline of the project. We're now at the sort of the first and second stage here on the timeline. So right now we're on track to open the facility January of 2022. Just for the absence of doubt, it's not to say the timeline can't slip by some months. We can't control everything, but in any event, right now we're tracking well. I think the big question is going to be how fast it is to get through permitting, because that's a more technical phase of the project, the planning. But I guess maybe I should say we're actually in steps 1, 2, and 3 of the timeline. We're tracking. So that's how we're doing there. Next slide, please. Okay, so here's investment return highlights. We've broken it out into 3-year average, 5-year average, 10 and 15-year average. Obviously, these are not guaranteed returns, but this is our projections based upon our financial models, which take into account, we believe the comprehensive financial cost of the project, including debt schedules, etc. You'll notice that the return is highest for the first 3 years. The reason that is that that's where the biggest bump happens in terms of going from bare land to a completed project fully leased up. So that's the reason why it is the case, and makes sense. I don't know if anybody has questions on this, or we should move on.
I'd say you keep moving on.
Okay, I guess one of the things to call out here on the slide is that the returns don't include any returns associated with a cash out refi, which so far in our history of having our company, of the 4 facilities, we've done 2 cash out refis of the 4, and we've done 2 cost segregation analyses, 1 for each of the 2 facilities of our 4, to capitalize on accelerated depreciation. And our investors generally get approximately a 30% tax write-off of the principal of their investment. So historically, that's what investors have received. So suppose someone invests $100,000. Historically, they've received $33,000 for a tax write-off once we do the cost segregation analysis, which is generally within 3-ish years of the investment. So that's nice to have. It's not included in the return profile, or is the cash out refinancing. Okay, next slide, please. Okay, value analysis. Somebody asked a question during our webinar here, what is the rental rate? So these numbers are based upon the financial model and the rental rate of $795 a month per unit on average. You can see in the project capital appreciation per year component on the top of this slide, you can see where it says construction underway, construction complete, facility open. You can see the big jump in the value of the facility, which is to be expected. So that's why in the previous slide that shows returns 3-year, 5-year, 10, 15, that the 3 year is the biggest part of the return. Below, we have the dividend yield per year. You'll see the projection starts at 3.28 and goes to 14%. And just to be clear, that investors who invest in this investment opportunity are receiving both dividend as well as capital appreciation. It's obviously not one or the other. Investors own their pro rata interest in 4580 East Cary Avenue LLC, so they own real estate, cash flow, capital appreciation. And then after, in 2023, you'll see the capital appreciation annually move up at 5% to 6%, and that's sort of where we think increase in values will be. It can always be lower, it can always be higher, but we think that makes sense based upon our track record and our history of buying facilities and what they have appreciated over time. Next slide. I don't know if there's any questions on there, Jeremy, but
yeah, you have several actually. So is this a PE fund structure with GP and LP? How much of your own capital in the project?
Okay, so it's not a PE structure, it's not a fund, it's an LLC. So investors are investing as members of the LLC. And again, each investor owns their pro rata ownership, based upon the unit price and the amount of capital they invest. So we need to do this project because 85% is being supplied by the bank. We need $581,000 to meet the bank's requirement to move forward with the project. We're just starting to market now, obviously, and in the last week and a half, and we've raised $75,000, $80,000. My intent is to put up about $100K of the 600 to a million. So we need 581,000 only, but we're raising 600 to a million because I want to have some reserve. And the financing is both bank and SBA. And the SBA is known for once they give the loan amount, that's it. So when you're at the end of the project, if you wanted to add something, that's on you, the developer. So we wanted to have some extra reserve. We may not need it, but we wanted to have it. Also, obviously, just the way the economics work of financial analytics, the more cash you raise and the lower leverage, the higher the return profile. This slide deck is built on return profile, assuming about $1 million raise. So it'll be a lower leverage than 85% loan to cost is the plan. I hope that answers that question completely.
Okay, if it's an LLC, are we on PGs?
No, the only one that's PG, the person asked the question is personal guarantee. I, David Baker, and my management company are the only ones on a personal guarantee. So all my assets, unfortunately, are personally guaranteed for this project, and no members are having a personal guarantee. Only me and my entity and my assets have a personal guarantee to the bank and SBA.
How long will it take to get fully rented?
Very good question. We're actually going to start marketing and taking reserve deposits 6 months before the completion of the facility. So while the financial model calls that we'll be about halfway leased up when we open, I believe we can do better than that. I cannot guarantee that, but I believe we can do much better than that. The third-party management company that I've been in discussions with about conducting daily operations management thinks we can have them all leased up before we open. But again, the model here, return profile, et cetera, assumes that we'll be half leased up when we open. I do think we can do much better than that, not because I want to be an optimist, but there's only 54 spaces. There's only 2 other competitors, one selling condo convert units, 40% of them sold, plus or minus, and the other competitors under construction. There's no one else out here. So I think it's reasonable to be optimistic about opening up with most of the units rented. But again, the model here just shows 50% rented at that lease up plan for January 2022.
Okay. Let's see. It's a lot of questions. What's the width of the drive aisle, and how do you plan on marketing?
So the width of I can't see the again, even if we were to flip to it, I can't see it now with right now just how the deck, how it's configured. But I want to say the drive aisle is about 45 feet in width. Maybe it's 50, but I'll apologize in advance. I don't remember the exact width of the drive aisle. It's 45 to 50 feet.
Go.
Okay, and then there's, I guess one other thing to point out vis-a-vis the drive aisle is, as people can see on the site plan, I believe that's page 13, that there's a turnaround at the end of the facility has to be approved by fire. So far, they've been fine with it. So basically, someone can drive down to the end of the facility, turn around like a 3-point turn, and drive out.
Okay.
So that's what one does because, well, first of all, fire requires it if you're not going to do a loop, and secondly, you want to have a way for people to easily turn around. The sawtooth design definitely helps, but again, there's a turnaround.
Okay. And how do you plan on marketing?
So to do marketing, we do many things. Most of it is online. A lot of times we'll use sites like Sparefoot, SPAREFOOT, sparefoot.com. It's a big marketer for most facilities that do online marketing in the United States. So we use Sparefoot. We do, Google, search engine marketing, SEO. What we're doing right now is we're in the process of building a website. So we'll actually have that up and running long before construction's completed. So we'll be using that. Social media. Sometimes we'll even use Craigslist. So we use 10, 15 different things to market our facilities.
Okay. Do you want more questions, or you want to finish out the presentation?
Sure, we can take another one and then move forward.
Okay. Who's watching the cameras? Is there security personnel on site? And if not, what's your plan of action if seeing something funny on the cameras?
Good question. So generally the facility manager is watching the cameras a fair amount, even if they're off duty. That being said, we have an alarm company that we use, and they watch the cameras also. I don't think that they're glued to every camera of every facility all the time, but like any monitoring client, they will monitor the facility, look at the cameras, et cetera.
Okay.
And also we do drive-bys of the facilities. I personally drive to our facilities, you know, at sort of sporadic, unpredictable times. I'll actually drive through it Saturday night, et cetera. So between drive-throughs, between the security company doing monitoring, between our people looking at the cameras, I can't say we can't miss something, but everything's being recorded. That's another important thing. We can play back for the police. We can, you know, play back. We have to look at something. Somebody, you know, runs into something. So there's a lot of people watching the cameras at different times.
Okay.
Should we move on to the next slide? Okay, so this is some of the technology that we're implementing. I'm not going to read each line to everybody. No one's interested in that, of course. I will say there's something I've really been contemplating, and it's not listed in here, but it's something that I've been thinking about a long time based upon our experience at our other self-storage facilities. And that is, I'm thinking about buying a robot. So there's a company named Nightscope, KNIGHTSCOPE, Nightscope.com. I originally found the company back, I believe, in 2012 when I was talking to Bill Lee, the CEO, about taking him public. That didn't happen, but I monitored the company for the last several years. They've got a great set of products. And so we are thinking about putting in an automated robot to roam throughout the facility. It has all sorts of capabilities: monitoring, verbal commands, dispatching the police, and it's a huge deterrent. No one wants to mess with a large robot. So I'm thinking about that. It's not super expensive. It's tens of thousands, you know, up to several tens. It's not hundreds of thousands of dollars. And again, the more automation you can have, the better. The more security you have, the more you can lower your insurance premiums. It's attractive to tenants, so it's a huge safety thing. So we haven't decided in final, but it's probably the most important thing I can talk about here in terms of additional security that no one really in the industry is doing. But we're going to continue to explore it and consider that when we open, and the technology will be even farther along in a year and a half. So I'm pretty excited about exploring the possibility of in addition to having high walls and cameras and alarms and unit alarms and internal locking doors and so on and so forth, we're definitely considering a security robot. Next slide. Okay, somebody asked about dump stations. So dump stations are going to be back here in the back of the facility where the turnaround's located, wash stations as well. And this, at the end of these buildings here is where a couple of the smaller units are. There's only, I believe, 2 units that are much smaller than the rest for a vehicle here or there. The rest are the larger units, 17 feet wide, center on center, and 59 feet deep-ish, depending upon the unit. And the roofs, I didn't mention this, the inside height for each unit is 18 feet. And I believe the highest RVs, including the sunroofs, et cetera, that pop out are 12-ish feet. And the roll-up doors are 14 feet high. So there's plenty of room to clear height, width, length, et cetera. Okay, next slide. Okay, financial summary. I'm not going to read this to everybody, but here's a financial summary that describes where we expect to be in the first year of operation through 2037, looking out 15 years. If you look at 1, 2, 3 rows down, we've got our projected NOI. It's EBITDA to Wall Street people, but NOI here in real estate. So this is projected NOI, obviously not a guarantee, but this is what we think, anticipate, hope based upon our financial model and assumptions and where we are in the project. Next slide. So thank you. So I won't read this to everybody, but somebody asked about PGs. So talk here about managing member, bank financing guarantee, four sections down. So again, I'm providing the only personal guarantee for the project. Investors are not providing any personal guarantee whatsoever. Distributions quarterly is our plan, and holding period, people want to know when can they get out. So the way the operating agreement is drafted, after the 5th anniversary of one's investment, somebody can get out, but we're not raising that much money. And while I can't guarantee it, I expect that the value of the facility will be 2.5 times the cost once it's completed and leased up. So it shouldn't be a problem to take someone out of the investment if they want to get out earlier. So we're, well, that's what it says in the operating agreement. Again, we don't want to keep anybody in the investment that doesn't want to be here. For us, this is the beginning of many facilities this type going forward, and we want people to be happy. So we have no interest in keeping somebody in longer than they want to be. It's drafted for 5 years just because that gets through completion and lease up and several years thereafter. Next slide. Oh, my bio. Okay, so Jeremy, if we have time, we can take more questions.
Sure, you've got a lot of them. Anybody who has questions that we aren't able to get to, you see David's email at the top of the slide deck. I will, we can also provide it in a second, but let's just go with a couple of questions. Let's see. Do you plan to call outside capital prior to securing building permits?
Do we plan to secure outside capital?
Prior to call outside capital prior to securing building permits.
I don't know what the term call outside capital. It's not a capital call like a private equity firm, but we're raising capital now so that we have capital when it comes time to go to the building permit process, because we have to engage mechanical engineers, electrical, et cetera. So civil engineering, there's a big civil engineering package required. So we'll be working with contractor and civil engineering firms. So the idea is to raise the capital now so that we have it, as soon as we're through planning, we can start focusing on the construction plans, if you will, and submit for permits as soon as possible. So I don't expect an additional capital call because we're raising money now far beyond what the bank is asking us to raise. So I don't expect an additional capital call for this investment opportunity, but we are raising the equity now, not later. There's really no reason to wait.
Okay. Will customers be required to provide insurance, or will you offer insurance for a cost?
Yes and yes. So tenants can provide their own insurance, their own homeowners insurance, but they are required, as is the case with most facilities in this country, to have some sort of insurance. We will offer tenant insurance. We'll sell it. It's great margin for us and good protection for the tenant, but we can't compel them to buy ours. If they want to utilize their own, they are welcome to do that. In our current facilities, we have some situations where the tenant insurance is opted in by 70%, 80% of the tenants. Other places it's 20%. But one way or another, there needs to be insurance.
Can someone sublet?
No. That creates a big legal problem in terms of recourse for us. I don't know of any self-storage facilities in the country. There may be one, but I've never heard of it that would allow that, but it creates tremendous problems in terms of privity of contract and vacating a delinquent tenant, et cetera.
Okay. Let's see. Tons of questions. How wide is the actual door to each unit, as this will dictate ease of backing in a motorhome or tow vehicle?
I'm sorry, how wide is each unit, or how wide is the roll-up door?
The door.
Okay, so the roll-up door is planned to be and rendered and site planned as 14 feet wide. So what we did is we looked at the widest vehicles, widest RVs that are allowed to be out on the road. I may stand corrected for someone that knows more about RVs than I do, but I believe the widest ones are 10.6. I don't even think any of them are 11 feet, but we assumed 11 feet wide with a mirror going out 9 to 12 inches on each side, which still gives a ton of clearance. I'm probably much wider than is the case, but we went really, really wide. We looked for the widest mirrors, the widest RVs, and we still have 1.5, 2 feet of clearance, depending upon the vehicle. Also, most of these big RVs do, with the expensive $700 piece mirrors, most of them fold in, but we assumed no folding in, wide mirrors, widest RVs. So 14-foot wide doors.
Great. Are the units going to be constructed from typical light gauge metal walls used in self-storage, or something else like concrete block?
It won't be concrete block, but I believe that the walls will be thicker than standard self-storage, partitions, because they're going to be structural in nature. So they can't be the same, thin walls that are generally used in self-storage for the specialty storage. They're going to be load bearing, if you will. So they'll be thicker, but it will be metal. It won't be masonry.
Okay. How have your properties performed during COVID?
There's a slide. If we go back, Vadim, can you go back to the track record that I think it's operating performance is the name of it. So the answer to the question is we've been mildly affected with COVID, and I believe we had 1 month that we were a couple $1,000s light on one facility, though we may have caught up the next month, and I can't guarantee that. So we've been minimally affected through COVID, even when Governor Sisolak said that we can't auction, can't lien, can't evict, and we can't apply any late fees. We were deemed an essential business, but in any event, that has gone away, and we've been minimally affected. And here's a graphical representation of COVID. So I hope that helps.
Yes. Do you have a sense of the market breakdown in percentage terms between RV, boat, and auto storage?
No, I don't. I think that there's going to be a greater propensity of RVs, and then a lesser amount of RVs and boats, and then a lesser amount of vehicles, because people can store vehicles elsewhere. That being said, with the width and length of our units, depending upon the width of the vehicle, again, it depends on the width of the vehicle, but one could get 3 to 4 vehicles inside one of our units. Again, depends upon the width of the vehicle. But I think there'll be, of course, more RVs, slightly less RVs and boats, and then less vehicles.
How are you underwriting rents given the uniqueness of the property?
So what we do in the storage industry, Vadim, can you go to the property highlight slide? Thank you. What we do is we do what's called a rental rate survey, and we're looking at rents basically in the zip code and out of the zip code for similar facilities. So, we've looked at facilities that are not RV and boat covered storage, but, covered as opposed to enclosed. We looked at our competitors that are selling the units. We've looked at, construction costs for the one other competitor. And so we've sort of triangulated on the cost. We know we're close at $795, but I can't tell you that it wouldn't be up to 900 or, down to 755. But I can tell you that we'll have one of the most, if not the most secure facilities in Vegas, and one of the highest, if not the most amenities in Las Vegas. So we know we're right in there based upon some of the surveying that we've done and what we've got compared to our competitors. Other questions?
Yes. Would you consider a single source JV capital partner for this project and future development opportunities you may want to pursue in the Nevada market broadly?
I'm always open-minded, always.
Okay. What type of zoning is this project falling under? How does that approve for boat and RV?
Great question. So I'm glad we're on this particular slide, the property highlights. So the property is zoned M1, which I believe is, I know it's industrial, I believe it's called light industrial. And so actually, if you look at the code, I just learned this as I was going through this, but there's actually a code in the planning department. And if you look in the code, self-storage and storage, not just self-storage, any kind of storage is listed as a permissible use. So I think that was one of the reasons why the seller, who's very, very sophisticated, owns a lot of land, may have decided to let the property go, because I'm not sure if they had figured out what they wanted to do with the property. So obviously they didn't figure it out or what have you. But it is zoned M1, and that is industrial, and storage is called out in the code as a permissible use. So we're fortunate that it made sense for us. I don't think we would have done a self-storage facility here. There's other competitors in the area, and again, I think the market's getting saturated. So in any event, that's the zoning.
Are any of your other properties for vehicles?
Are any of the other properties for vehicles? Well, they're not dedicated for vehicles, no. Somebody can park a vehicle in there, and we have had and have people that store vehicles in there, but they're not dedicated for that. They're not temperature controlled. They don't have amenities, etc.
Okay.
And I wouldn't want to park my vehicle in a facility that wasn't temperature controlled, but that's just me.
Great. If anyone has questions, they can always email David at dnb@storage24x7.com. And his phone number is 415-297-4749. Let's see. We have a lot more questions. I will get them to you, David, so that you can answer them to people offline.
Okay, thank you.
Let's see.
And again, my contact information, as Jeremy mentioned, should be on all or most of the pages of the slide deck, email, phone, etc. Feel free to reach out to me. I'd be delighted to speak with you.
Perfect. Well, this concludes today's webcast. Feel free to email David at dnb@storage24x7. That's dnb@storage24x7.com. Or you can give him a call at 415-297-4749. Additionally, if you have questions, you can always email Michael at Flya or Jeremy at Flya, and we will forward them to David. Thank you so much. And that concludes the webcast. Anything, David?
Thank you very much, ladies and gentlemen. Appreciate your perspective, interest in this investment opportunity, and look forward to speaking with you.
All righty. Goodbye.